Hey traders, welcome back to another video. Today we're going to be taking a look at, well, a little bit of everything because markets are already on the move and this week is crazy. So let's go ahead and jump into it. We have the S&P 500 lower today. Same thing with the NASDAQ kind of chopping out and about. And then you have the dollar index up a lot today. So dollar index making a push higher, which we'll talk about in just a moment. And then you have the Dow down as well. The euro's lower, the pound is lower, gold is lower, and even oil, well, kind of trading sideways on the day. So first up, let's take a look at the catalyst today, or kind of the culprit, if you will, for all this volatility today. It is a stronger dollar index. We can see the dollar index actually briefly traded lower this morning. We had PMI data, which came out lighter than expected. Let me show you. So here's the latest manufacturing PMI data here on the Edge Finder. We can go ahead and see that this is the latest print. We got a reading of 48.5 compared to the forecast, which was 49.2. Now remember that the growth and decline kind of bar is at 50. So if it's above 50, it's growth. If it's below 50, it's decline. So we do see continued decline in the manufacturing components of the economy. And in the US, that's of course not great for the US dollar. That being said, why is the dollar index up today? Well, initially, this actually moved the dollar lower, as we saw again earlier. We mentioned dollar index traded lower on the lower time frames. You can see right at 10 a.m. when that PMI data came out, we shot lower and then we proceeded to shoot higher just after that. It does seem like the dollar strength is persisting at this time. So from a daily chart technical analysis perspective, we do see a potential higher low forming as the dollar does shoot off of this area of support right around 105.5. Again, kind of retesting this same zone and rejecting it pretty quickly, showing still some appetite for dollar strength this morning. That, of course, is going to move other markets like the S&P. The S&P 500 on a 4-hour chart looks like it's threatening to actually break underneath this 5460 level of support, which held for most of last week. You can see we came down, continuously would find buyers off that area, but if you get a really strong candle closing underneath, it is possible that we go back and retest lower levels of support for those of you watching the indices. This is a pretty big deal, and you can see it's not as extensive on the NASDAQ, but we are still seeing a red candle here form on the 4-hour chart. So on the daily chart, the NASDAQ to me actually looks like a potential setup here around this area. I'm going to keep an eye on it, but I wouldn't mind trying a long position there if I can get one. If I do take that trade, it'll get shared inside of the Discord group. I'll show you something that kind of has me interested in the NASDAQ. When we take a look at the commitment of traders data for the latest filing, which by the way, if you're new to this shows you what hedge funds and institutional traders and investors are buying or selling. Wouldn't you like to know what the institutional money is buying or selling? Well, it's not actually that secret or fancy. This is the commitment of traders data. It gets released every single week, and it shows us a summary of what institutional money is up to. Now, the net positioning section, which is this one circled here, is where I want to start. So overall, gold continues to be, on a proportional basis, one of the heaviest long ratios of different symbols. Same thing with oil, same thing with silver, the NZD, which is the New Zealand dollar, the dollar, and the Nikkei. Conversely, we have the other side, which is the Swiss franc, we have the yen, the Canadian dollar, the Russell, and 10-year treasury notes. These are your more bearish assets on a proportional basis. That's longer term though. This is better for swing trading on a longer term basis, or even position trading or investing. But for the traders out there, if you're more of a swing trader, a scalper, a day trader, etc., this piece of information that we have here is arguably more important, at least in my opinion. What we can see here is that if when we talk about the NASDAQ for a moment, we highlight this, you can actually just, if you have the Edge Finder, you can just click the name of the thing and it will highlight it and give you more information so you can read it a little better. So I've just selected the NASDAQ. We'll do gold next in just a second. What we can see is that on a week-to-week basis, the latest buys and sells showed a lot of buying on the NASDAQ, and on the short contract side, we see a lot of selling on the short contract side. So this would be considered a pretty bullish week-over-week change. So perhaps some money flowing on the institutional level into the NASDAQ. But let's do gold as well, because I know that's another popular one. The NASDAQ, the dollar, and gold, probably some of the most popular things to trade for most traders out there. What we can see with gold is there also was a bullish week, but it's kind of more confusing. Check this out. we did see a decrease in long contracts, which might be considered bearish at first, until you realize, well, they also massively decreased their short contracts even more so. That would be considered a pretty bullish week over week, and that is how our software helps you to kind of aggregate the data to get a full picture in terms of what institutional money is doing on a week-to-week basis. With the Edge Finder, we also allow you to track retail positioning, so you can take a look at like what is happening on the retail side, what are they buying and selling, and actually cross it against what institutional money is doing on the long and short side as well, using the smart money indicator found over here. And if you haven't already heard, we just launched our biggest discount on the Edge Finder of the entire year. We're doing our summer sale this week, and it is a very short-term sale, but you can currently get half off the Edge Finder. It's very easy to do so, and again, this is our biggest discount that we do all year long. If you're waiting on the sidelines for a better one, you won't get it. This is the lowest that we go. So if you're thinking about getting a copy of the Edge Finder, or you've been looking at it for a while, here's how you can get some information. Down below in the description, using the first link, you can hit our chat link where you can speak directly to a person on our team. Just click chat now, then select Edge Finder 55% off summer sale. And for those of you who are watching the video today, there's an extra 5% off discount for those of you who are watching. Again, first link in the description. That is our lowest discount that we do all year long. So take advantage. If you've been thinking about getting a copy, you can unlock all of our powerful tools and data. So I mentioned I kind of like the NASDAQ right now, and what I am looking for is a bit more of a pullback on this one because it is getting a bullish reading thanks to the commitment of traders data, retail positioning, seasonality, trend, GDP, SPMI, which is services PMI, inflation statistics, overall trending lower, which is good, and employment change growing. I mean, there's enough here for me to be bullish on the NASDAQ with the possibility of a soft landing. And so with all of that in tandem, I am personally looking for long setups on the NASDAQ and S&P if we can get some healthy corrective moves, which I think might be forming. On the S&P 500, I am personally waiting for a little bit more of a pullback if I can get it. I do think that we have room to go lower. This is a nice, strong, supported upward trend going into, the rest of this year in my view. However, I do think that we are due for a little bit of a corrective move, and even if this level comes into play, I'm fully willing to get stopped out if I need to and enter a second time or try again at lower levels. So I'm looking to take a couple attempts at the S&P 500 longs or the NASDAQ longs, depending on what I can get set up. Of course, again, that is in combination as long as the Edge Finder continues to show a nice bullish rating for S&P and NASDAQ. In terms of gold, I am still bullish on this one, but it is certainly taking its sweet time. I've been at a break-even level off and on for several days now and just kind of holding into this trade. The gold market needs to make a decision on a technical perspective. We do have a few lower highs coming into this chart, which you might say is looking pretty bearish. But on a longer term basis, we had a really strong first half of the year, which I think could continue, especially if we see rate cuts coming down the pipeline. At the same time, we have a huge level of support at this 2300 level, which I think will continue to support buying if we see a breakout of that level. So I do have a stop loss on my trade. If price breaks that 2300 level, I'll take a loss on it. If we can break to the upside and kind of get a breakout trade going, I'd love to see a break of these previous highs, put in some higher highs, and then I can look to trail stops on my position. So again, I am long gold. I am also long silver, and I will hold so unless we get stopped out, right? So stop loss, you shouldn't be afraid of it. A stop loss is going to happen no matter what at some point or another with any trade. We'll see if it's this one or not. I do have a bullish bias on metals for the rest of the year unless we see, something dramatic happen in the rate cut expectations. But for the most part, I think they have room to squeeze higher, and I'll just look for possibilities to trail stops or to stay in until I get stopped out. So we'll see what happens there. Yields are up dramatically today, which is not good for my TLT position. You guys remember I am long TLT, and this completely fell apart in the last few days, but I'm not too worried. This is more of a longer term positional trade for me. I don't have a tight stop on this or anything. I'm keeping a relatively small position size on this in my account, but I'm looking for yields to come down this year. And if yields were to come down on the idea of rate cuts, that would lead TLT to likely trade higher overall. Now, again, I'm in the red on this trade and I've been in it for some time. So, is it a little annoying that it's taking a while? Yes, but this is more of a positional trade and I'm not looking to time this one specifically. I'm really just looking for, to give it some room to run to the upside if it wants to. And if it doesn't, I'll just hold on to it. And TLT, ETF, because it's, you know, representing long duration bonds, I do actually get paid a dividend for holding it. So I'm collecting some sort of income just for holding this position. And oil seems to be supported around the 81 level. You can see we consolidate a little bit with a possible breakout forming now, which could give some more inflation concerns, you know, kind of give more attention to that as we go into this month's really key data. We have jobs numbers on Friday and inflation later on this month. I'm talking about CPI, by the way, of course. Now you may ask, why does that impact the inflation story? Remember, rising energy costs means rising costs for everything else. By the time that cereal box gets to your grocery store, you know, if the cost of fuel, transport, planes, trains, automobiles goes up, so does the cost of that cereal box, hence some level of inflation. Another thing to remember in terms of inflation is that we do have two old men battling it out for presidency this year. And regardless of who wins, they both have high track records for spending a lot of money. Both Trump and Biden here in the US likely would continue to spend a ton of money. Again, their track record, both of them spend a lot of money, regardless of what your political feelings are. In terms of finance, in terms of the markets, I think the market is very well aware of this, and you know, we'll see where that goes. But it could be the case that yields are backing back up. You know, we're seeing a rise in yields because bond market investors are saying, well, hey, you know what? Either one of these guys is going to print a lot of money. It's going to lead to inflation. So if we're going to buy bonds, we need a higher rate to help compensate for that higher anticipated erosion of inflation on my bond purchase. Think about if you bought a bond and it's paying you 4%, but inflation goes up to 4% also, right? So if you have 4% inflation and you're getting a 4% yield, you're really making nothing. But if it's expected to get a 4% inflation, but then the bond market says, well, we need like a 5% yield, at least they'll make 1% a year in real gains after inflation, right? You always have to think about inflation on your gains. So if you're buying the S&P and the S&P offers you 10%, now this is not guaranteed and there's massive drawdowns that come with it, but if that's your yield and you have an inflation of 4%, you still make money on your investing, right? Your wealth actually goes up. It outpaces inflation. So something to think about with the bond market for sure. Speaking of inflation data, you can see CPI was coming down. It's still stagnated for now, and it is very much weight on the shoulders of the market to see what happens with that next inflation report, the inflation data for the month of June. And if that inflation data starts to come down, what that would mean is rate cuts are more likely to come this year. If it continues to go sideways, we've got a problem. And here's a look at the yield curve, actually, the 10-year bond yield minus the 3-month note yield. You can see here some interesting divergence. This has been inverted for some time, and it does make me wonder at some point when we start to see this uninvert, or this kind of uninversion, if you will. Usually that is when we do see a recession in the US economy on a historical scale. That is actually every single time we've seen that, we've seen a recession to follow. So when that comes back is the question. No one knows. It is kind of a best guess scenario, and we'll see where that happens. But I do like to keep an eye on that chart. You can find it if you have the Edge Finder under interest rates data. I mentioned manufacturing PMI data came out this morning, lighter than expected. I wonder on Wednesday when we get services PMI data if that will also show signs of cooling. That signs of cooling could help the inflation story and perhaps the rate cut story as well. And on a seasonality basis for the NASDAQ, we're actually entering into arguably the best month of the year on a 10-year historical average. The month of July is a really positive, month, at least in the last 10 years. We'll see if that trend does continue this year. So far, the NASDAQ's down a little bit this month, but we'll see where that goes. I am personally watching the seasonality on the NASDAQ, but also keeping an eye on gold. Actually, let me just search it up. We can pull up the chart for gold here and see what the expected move is. So it's just very slight. You can see some very slight positive expectancy for the month of July for gold. So just a reminder, the Edge Finder 50% off sale is available. The first link down below in the description if you're looking to get access. And also there are also something down below in the description if you're looking for a new brokerage. It might be worth checking the ones that are down below there as well. If you choose to use those links, you'll be supporting my channel. I'll really appreciate it. But also there's some special sign up perks available for viewers. I've set up special kind of agreements with each one of the brokerages in the description down below that get you something special when you sign up using the links. So check them out. Thank you very much for watching. Trade safe. We'll see you next time. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel, and we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.